All right, welcome into Market Day Report. I am Scott Schulte. Happy Friday. Glad you're with us here. And again, we love having you tune us in. Oh, boy. At the shop or the garage or the barn or the office, wherever it may be. We love having you with us, and we appreciate all that you do for us. Let's see what we did overnight in corn. And we have a little bit of a negative tone. At least we did when I did the radio show about an hour ago. Let's take a look at corn. That was lower by 3 cents in the end. 455 and a half at this last in July. And that was just a tick off the low, and we've just had not even a 3 cent range, folks. A tick off the low of a 3 3/4 cent range. New crop diesel was down 3 cents to 473, and that's just a half cent off the low there. So corn trading a little bit lower. The beans were lower overnight as well, I think. Yeah, 4 cents lower in the July. 1185 and a half was last there, and we've had an 8 cent range. And I guess you could say we're 4.5 cents. Well, we're basically in the middle of the range. So I'm not going to go into that. November's down 5.5 cents to 1154 and 3/4, and again, that's about 3.5 cents off the low there. And we had close to a 9 cent range. That's what's going on in the beans. Let's go to the wheat. They were lower. I think they were lower too. Yeah, we got a little red on the screen here today, folks. July down by 5 1/4 cents overnight. 614 and 3/4 is last. You move out to the D says down 4 3/4 cents to 656 even. Okay, moving right along. He says let's go to the wheat in Kansas City. That was down 4 1/4. 632 and a half. Was last in that July contract. That's hard red. Let's go to the D's. That was down 4 1/4 to 662 and 3/4. All these ranges, they're about 8 9 cents. So that's what we've got going on in the hard red. Let's take a look and see what spring wheat's got for us. That's a lower board too, but just by a couple of pennies. 2 cents lower in the July to 665. The range is there about 5 cents. We're 3 cents off the low of the range. Well, we're in the middle of the range. It's 5 cent range. How about that? Cotton, what did that do for us? Well, this is the only one that's up overnight, isn't it? That's funny. This has been the one that's always been down, but we have July up 24 points to 71.59. We're getting too close to the sixes, if you ask me. Deese sets up 34 points to 72.13. Let's bring him in. He's the man we start. He's the leadoff hitter. Brian Hoops, Midwest Market Solutions. He's the president. He's down in Springfield, Missouri. Good morning. Happy Friday. What's top of mind, sir?
Well, good morning, Scott. Yeah, happy Friday to everybody. Getting out there for Father's Day on Sunday. Happy Father's Day to all the dads. This weekend looks to be pretty hot across most of the country. A lot of the Midwest is going to see very warm temperatures and extend into midweek, and that seems to be kind of what everybody's wanting to focus on. And it was a kind of a good excuse for corn to rally. And you look at charts, and this was a 50% correction of its recent down move, with yesterday's highs at about 477 or so. I thought maybe we get a little bit more than that, up to the 62 and into some resistance zone, but maybe we're not going to get there because let's face it, it gets hot every summer. The hybrids are bred to withstand a little bit of heat. We have plenty of subsoil moisture for the plants to draw off of. So I don't really see that this is being a negative impact at this time for the grain market. In fact, you talk to producers, almost everyone universally says they'd love to have some heat. They'd love to have a little bit drier conditions and get that crop really to grow and sprout out of the ground and grow. And down here in Missouri, it's shoulder high and going to tassel. So there's really not a real stress that I feel on this crop at this point in time. So now if we get into mid-July and it hasn't rained and it's hot like this, that may be a different story. But at least at this time, I don't think there's that issue that heat is going to hurt us. It's probably going to help us as much as anything at this point in time, Scott.
The rhetoric started. You've heard the dome of doom, the ring of fire. I mean, everybody's trying to bang that drum right now. Like you said, I think that the precipitation we got, which delayed planting, I guess, a little bit, ultimately that's going to be a good thing.
Yeah, it's going to help us out a lot. And, we're humid down here. And this goes for a lot of the country. When you get that extreme heat, you get humidity with it, you get instability in the air. And we had showers overnight that we weren't expecting to receive. So that's what happens when you get that heat. Sometimes if there's a lot of humidity with it, you get some surprise showers. And that really makes a greenhouse effect when it's humid, when it rains, and when it's real warm. So I don't see that there's really a stress to the crop right now. And it looked like just kind of retracement rally that unfolded yesterday. We're back down in the overnight. This dry weather should really help out the winter wheat harvest, and that is going to continue to put some pressure against Kansas City and Chicago wheat.
I think we have like a 30-session low in Kansas City overnight. Did you hear that too?
Yes, we did.
That's not good either. Wow. All right. A lot of red on the screen here today. We'll try to make the best of it, but stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Brian Hoops. He's with Midwest Market Solutions. We'll be right back. All right, welcome back. Let's talk about the livestock, see what we did yesterday. Give us an idea about what we might do today. Let's bring up a live cattle board. I think they've got that one put up there, and we've got a little bit of a gain overnight. August was, well, not overnight, from yesterday. August was up $1.17 yesterday to 179.50, and that was only 17 cents off the high. We were 65 cents better in the October, right behind it to 181.70, and that too was only about 17 cents off the high there. Feeder cattle, what did they do for us yesterday? Well, I'll remind you that we were down big, and then we really clawed our way back to almost unchanged. So even though this was a little lower, it was almost like a victory. August was down a dime to 257.47, and we had November down 5 cents to 258.55. We move over to the lean hogs, we'll see what that's got for us. And that's the July board, 92 cents lower there to 92.77, traded heavy all day. August was down $1.35 to 88.60, and that too was only about 37 cents off the low of the day there. That's lean hogs for you. Let's get to our guest analyst who's been waiting in the wings. It's Brian Hoops, President of Midwest Market Solutions. He's got the screens that can kind of tell us what things look like. We got about 120 seconds. Brian, what do you think?
Well, we have some positive news to talk about in the cattle market. We should open maybe 25 to 35 points higher this morning on some follow-through buying from yesterday's strong rally. That occurred because cash trade's coming in better than a week ago. Dress trade 305, that's about $5 higher than last week's trade, maybe $4 to $5 higher. And in the South, we saw 186 to up to 186.50, $1 to $1.50 higher than a week ago. So there are some positives in that respect, and that gave us that rally in the futures. I think we opened stronger. Then the question becomes, do we run into some hedge pressure? Because you look at steer weights, yesterday they're up another 4 pounds, so we're 37 pounds heavier than a year ago. That's not good when you talk about that much increase in steer weights. And then you start talking about, the demand that we talked about yesterday, where the boxes are the slowest sales since 2017. The demand side of this equation is not real good, but if you can hedge your risk off, this is a great time to do it. Buy some puts, sell some calls, leave some upside available, but at least you get your downside protected in here.
Yeah, and to your point, a lot of folks that look at the cattle market, I think, look to see how well the consumer is doing, and we've had negative news about the consumer, but we've kind of been, hanging our hat on the fact that the stock market's held in there. It's doing well. It's actually been very resilient.
Yes.
But how many consumers out there are really benefiting from the higher stock market if 10% of America owns 93% of the stocks? We could be. Right. What I'm trying to say is we could be kidding ourselves about the attitude of the consumer, right? Because 90% of them aren't really participating.
I totally agree with you. And the ones that are participating, a lot of it's tied up in 401ks. So it doesn't matter
100%.
How much their 401k is moving higher if they don't have money to buy steaks and other high-priced meats this summer. So it's something that I think you have to look at from a consumer level. They're going to struggle in here, especially at these higher prices. So hedge your risk accordingly.
Yeah, it just seems nowadays, maybe it wasn't the same 30, 50 years ago, but it's such a bifurcated market with the wealth gap between the rich and poor. The bottom 50% of America owns 1% of the stocks. This stock market means nothing to them, so they still have to eat too. So maybe we've been giving that maybe we've been giving that too much credence. Anyway, something to talk about maybe over a beer at the tavern this weekend. Thank you very much, Brian. Brian Hoops coming to us from Midwest Market Solutions.